I just can't get enough of Deutsche Bank, baby. Boy, they've been coming out of the spotlight on them now. Two things. They've just been downgraded by the rating agencies. Deutsche Bank, zero hedge, slides after mortgage probe unveiled. Admission, it rigged stocks as well. Rigged precious metals, LIBOR, rigged stocks. I mean, are you going to be shocked to find out that there is absolutely nothing that these big banks didn't rig? I'm not. A month after admitting to rigging precious metals markets, Deutsche Bank has been hit with a double whammy. Actually, no, it's a triple whammy because they also just got downgraded. Double whammy, triple, of more alleged fraudulent behavior today, and the stock is sliding. First, Reuters reports that the bank took a charge of 450 million euros for equity trading fraud. And then Bloomberg reports that the Security and Exchange Commission is looking into Deutsche's post-crisis mortgage positions. First, as Reuters reports, Germany's Deutsche Bank said it took a charge of around 450 million euros last year in relation to share trading fraud, but declined to give any details on Monday. The bank increased its provisions for external fraud to 475 million euros in 2015 from 20 million euros in 2014, according to its annual report. The increase in the event type external fraud is caused by a provision for equity trading fraud, the bank said in the report, which was published in March. And then, as Bloomberg reports, the Security and Exchange Commission is investigating whether Deutsche Bank inflated the value of securities in its mortgage bond trading business. Mask losses around 2013, according to people with knowledge of the matter. Investigators looking at positions overseen by Troy Dixon, not to be confused with Mason Dixon, who at the time ran the bank's trading for U.S. government-backed mortgage bonds known as agency pass-throughs. Security Exchange is asking whether Deutsche Bank delayed recording losses on those securities over an extended period of time. This is a classic, I'm talking textbook perfect example of cooking the books. Financial fraud in every which way, not just them rigging things as in that kind of fraud, but fraudulently cooking their books. Can you imagine? I'm the healthiest bank in America. I've got all these assets. We're the number one bank. We've got the most mortgages. We got the most clients. We got the most everything. Look at these quarterly numbers. Look at these yearly numbers. Billions, billions, billions. We don't make any losses. And then somehow they were making losses. But we don't seem to see them anywhere. They're not posted anywhere. And over here is a landslide amount of losses. They just kind of forgot, or with intent, decided not to put those losses on the books. Because then all of a sudden this huge profit, tiny little loss, might reverse. And then those people who are holding, got a price here? See if I can look at this. It was at $17.10, dropped down to $16.85 at one point. Not that, not a huge amount, but it's, to be honest with you, that's the equivalent of silver at $17.10 going down to $16.85. I mean, that's nothing. That's like, that's normal. Never mind. And it goes back up. So when you hear something like this, Deutsche Bank, investigation, they cook their books, etc. Their stock shouldn't go down a few pennies, essentially, 15 cents, 20 cents, whatever the hell it is, 25 cents. And then on top of it, double whammy, triple whammy, they've been downgraded as well. Not just in one or two things, multiple things have been downgraded within Deutsche Bank at the same time. This should be a waterfall crashing event in any normal real market. What do we see? The equivalent of just a few little day traders selling off. There's not a chance in hell. What's really happening is the plunge protection team, also known as the President's Working Group on Financial Matters, not allowing any of these stocks to plummet beyond some predetermined amount. So again, that turd of a stock should have fell through the floor, broke through the earth, went down to hell, sat next to the devil himself, but instead went down a hair, essentially, on this news. That's the kind of markets we have today, which shows you, once again, we already know this, but proof that this piece of garbage is a walking dead man, and it is also covered by the club. Now, Zero Hedge has an interesting chart that I would like to share with you. Let me just grab this baby real quick for you. Let's take a little gander at that. Deutsche Bank is in the blue. Lehman Brothers, you know, the one that collapsed and went down to pennies, is the red. Man, oh man, is that a pretty damn similar looking chart. Where's Deutsche Bank gonna end? Right, so, and again, look at the time frame. 2008, March, right where my mouse is, March, April, May, June, July, August, September. Then it happened. And here we are, coming up on June. I think we all know how this one's going to end, but let me add a little more fuel to the fire. This is from a website I've never heard of in my life, but it's a finance type of website, and I don't know which country this is from, but it ends in .at. Finanzen.at. It's actually in English, though. So this must be an English version of it. This was just posted. This is the same day. Today's the 23rd that I'm doing this video. Same day that Zero Hedge posted that, and the same day that this article is posted I'm about to read you right now. New York, May 23rd, 2016. Moody's Investors Service has today downgraded the ratings of Deutsche Bank AG and affiliates, including the bank's long-term deposit rating. Now, I want you to keep in mind as I read this to you, and you know some things might stick out a little bit as things that got downgraded. I just told you about this 3-month window that Deutsche Bank wanted to give people 5%. If you give us $10,000, you promise to leave it in an account and not touch it, we'll give you 5% back on your money. 10,000 or more, 5% back. And I can see it now. Deutsche Bank collapsing. And everyone jumped, 5%, man, 5%, I gotta get in on that. And God help you if you put in a little too much in the insurance, or FDIC insurance doesn't cover your loss for some reason. So keep in mind, Deutsche Bank is offering 5% interest if you put in, I think, 10,000 or more into an account. So it's unheard of. Have you ever heard of getting that kind of return back in a bank? You know, checking account or savings account. I mean, come on. Moody's Investor Service today has downgraded the ratings of Deutsche Bank AG and affiliates, including the bank's long-term deposit rating, to A3 from A2, its senior unsecured debt rating from Baa2 to Baa1, its standalone baseline credit assessment to Ba1 from Baa3, and its counterparty risk assessment to A3 from A2. Deutsche Bank's short-term ratings and short-term counterparty risk assessments were also downgraded to Prime 2 from Prime 1 and to Prime 2 and Prime 1, I guess respectively. Today's rating action reflects the increased execution challenges Deutsche Bank faces in achieving its strategic plan. So, if you knew the bank, you're part of the club, you know the bank's going downhill, and you're one of these ratings agencies who only really stays in business if you give good ratings to these big banks, just like they did in 2005, 6, 7, 8. And everyone said, where the hell were the ratings agencies when this damn balloon in the market and balloon in the housing were developing? Ninja loans, no docs, no job, whatever. Everyone's approved. Ratings agencies, where were you guys? They pretty much said in so many words, it is hard for a man to tell the truth when his job depends upon him not telling the truth. So now they have to pretend we're doing our job. We got to give a little teeny tiny couple notches downgrade, not huge, but for Deutsche Bank. When, again, I just read you. Let me go back to it. Let's go back. Securities Exchange Commission investigating whether Deutsche Bank inflated the value of securities in its mortgage bond trading business, masked losses around 2013. So we're covering up the losses. This bank is worse than what the ratings agencies even kind of know. And the only thing the ratings agencies kind of know is based off of little stupid news things like this that, again, aren't the whole truth because they have been cooking their books the whole time. So this is a little cracking open of their books. Oh, you didn't write those losses down. You, what's the word here? Inflated the value of securities over here. That's wrong. All these things. And when a bank comes out and says to you and the whole world, we have this special program. You guys are going to love this. This is fantastic. We've got a special program. 5% interest put in a savings account. We only want your money for 3 months. You'll earn 5% on it if you put in $10K. Who can go wrong? Guys, this is great. It's a great deal. Excuse me. Hi, my name is J-Step4. How come no other bank's ever done this before? And now all of a sudden you're doing it. And you've admitted to fraudulent rigging of silver prices, LIBOR rates, of course, gold and silver, precious metals. And now potentially securities fraud. Does this have anything to do with that? Like you guys need some money in the worst kind of way? Why else would they do it? And as I said in my other video, why can't they just go to the European Central Bank or even the Fed and say, hey, we're one of the club members. We need some more money. We need some more money. Because what if, as I've been speculating a little bit lately, what if Walking Dead Man, Deutsche Bank, has been tasked and agreed to take the fall for the club? We were the sole riggers of all the markets. We rigged gold and silver. We rigged LIBOR. We rigged the London fix, all that. We rigged everything. And we told you we'll give you our emails and communications with the other banks, which I said in advance earlier, a few months ago, that my opinion on that, we didn't find anything else. We appreciate Deutsche Bank's honorable handing over of those documents. And we searched through them. It looks like it was just Deutsche Bank who's really at fault here. And by the way, Deutsche Bank's collapsing. It's going to be shotgun married off to some other bank, what's left of it. Oh, problem solved. You took all the blame. Derivatives, everything's handed over to you. You crash. No one else gets blamed for it. You're essentially the fall guy. So, once again, my question to that would be, then why do they even need to bother asking for deposits? People, please deposit some money in your special savings account. We'll give you 5% on your money. Maybe Deutsche Bank has been tasked with taking the fall, but Deutsche Bank wasn't around when the club had the meeting. They didn't get the memo. Oh, by the way, you're going to take the fall. So they're just doing business as usual to try to shore up some loose ends. It remains to be seen, but they're only asking for 3 months. At 3 months, we're practically in June, July, August, September. That's September, the fiscal year ending and all that crap. That's September. Markets crash. End of the full Shemitah cycle garbage, whatever. Remains to be seen. Take care.